Okay, how about this next one? Yay or nay? Okay, from my perspective, this one's, I think I saw the word too, scary. No, you're looking to short this trade, okay, is what you're looking to do. You do have a basic rollover here. You have a one bar attempt at a rollover here. This was the bar. This bar that dropped was the bar. So really you had a rising 20 period moving average on the hourly chart, way up there on the RSI, okay? And the pop back on this brought us all the way right back up to the top edge of the 25.5 support level, okay? This makes it really risky and a risk of a continuation snapback all the way back up. And in this case, it only went a few points back up, but the risk was high of a continuation, okay? So, and that's right, the fishhook was pretty darn steep too. So again, not really putting this in to trick you, but really getting you to think about this. This one I don't like. It was very junior to the downside here. It was really more of a V top on this one, running the risk that this could completely reverse itself. So, and then like I said, the hourly was clearly very bullish still on this one. Once again, heightening the prospects of a snapback up to like these levels up here. Too much risk on that one for me. Okay? So appreciate your answers, and it's good to walk through these together. This is real world setups, not just those fluffy, perfect ones. That's why I wanted to do this, to really prepare people and educate people as we move forward as a team looking for these different setups. So I think this really helps strengthen the educational process. All right, the next one's in play here. What do you say, yay or nay? That's right. Oh, yeah, they're flying this time. Oh, you can see it now, can't you? Exactly. All right, that's what I like to see. See, now you guys are, it's coming together. You had the volume even, the two up bars. You had the pullback bar, almost a doji on light volume. Lots of airspace. All systems going. What did it do? Shot up there about 5 points. Technically, if shot up more, but I would have been gone by the lower edge of this. We had a crooked finger down below, gang, setting the stage. And then you had a backup fish hook on top of it in the middle of the trade. That's a sweet spot right there. Okay, and of course the hourly had the same rollover. Beautiful stuff. Nice job on the identification of that. All right, now with that said, I'm going to go ahead and I'm going to intentionally, I wanted to go ahead and not leave off with the gravy one. I wanted to give you guys a tough one to leave off on the 30-minute charts here. What do you say, yay or nay? Don't be too quick to answer. Go ahead and think about this one for a minute. And I said, I know I'm not leaving you with the warm fuzzy on those charts. I want to go ahead and make sure you, back to reality, because they're not all going to be those super gravy ones. But it's nice to see that when those come, look at that. Okay, and the answer here is no. And the reason why is couplefold. Look at the bar that I'm showing you here. Let's zoom in on this for a minute and show you why. Look at the bar that I zoomed in on. That bar that closed there, this is the bar in question, the speed line barely got back up. The fast speed line closed effectively right below the slow speed line. Speed lines have not even officially closed back up yet. Okay, you see that? The speed line on this bar closed below this bar here. All right? So that's one of the key things right there. All right? The trend changing, that was great. But the fact that the speed line, if the speed line had been more like this, so this bar, if this speed line would have been over here, so they'd already crossed, then I'd at least look at it a little bit further. But there's a lot going on here. There's a lot of junk in the trunk, so to speak, here. We have, a lot of resistance up here. We did not get the speed line crossing over. There was too much risk, okay, with V spikes. V spikes lead to sometimes significant pullbacks, okay? So too much risk on that one for me. That one was a no, okay? And we see we had kind of the V spike here, and then this bar did go ahead and the hourly ultimately pull back. We did get the more significant pullback. It took a little longer than usually it does with the V spikes, but nonetheless, we did get a significant pullback there, okay? So too much going on up here. Not the crossover. So in this particular case, it was a no. But looks like most of you guys answered that correctly. So very good. Okay. Now let's take a look at the hourly chart. So now you got the hourly and the daily. Yay or nay here, gang? And let's see the answers fly in on this. You got to make a trading decision. Got to make a decision here, yay or nay. Don't be influenced by other people's decisions. Okay, the answer is yay. Okay. This is an hourly chart. Keep in mind, let's look at the background. Overall, the background the day before had a key reversal up in it, still within the overall trend. Remember how bullish I was when we were talking? I said the next day expecting to go ahead and open up. So this was back on Friday there, and we actually went long that day, as you recall. Okay, so we had key reversal up on Thursday. The next day it opened up above the speed line and tore on up. We were above the resistance level. We still had a couple of points. This is about the 12.5 level. This is the 15 level. So we had 2.5 points of air. Tom, was 2.5 points of air good enough to go ahead and look at a trade? And while Tom's there answering, we'll go ahead and get back to it. Tom may have disappeared there for a moment, coming back and forth. Anybody else want to answer? Is 2.5 points of air good enough for a trade? Sure. All right. Look at that nice smooth transition. Look at that on the speed lines. That's a great transition. Didn't even come down to the 20 period. It was up. It had a pullback and transition right back into it. Had up thrust bar here where it was pushing through resistance on a little bit heavier, not too much volume. Okay, didn't get that volume exceptionally high. See, it's only a little bit higher than the previous one. And then the pullback was on lighter volume. So yeah, there is an opportunity with that hourly. Okay, and remember with the hourly chart, you got to keep in mind the background is the daily chart. All right. So, very good. Let's go ahead and go to the next one here. Okay, next chart is up. Yay or nay? Okay. Hopefully everybody's seeing. I see somebody put old chart on there, but actually this is the new chart. And so the short answer is caution on this one. Okay. This one closed right in the middle of the reaction bar back here. And this bar here, it was on lighter volume, but it went ahead and closed almost near the low. So in other words, we hit this reaction bar below the 50% level, we find resistance, and then it pulls back and almost erases this bar. Is the trend resumption good here? Yes, it is. Okay. Is the RSI good here and MACD good here? Yes, they are. But this one, even though it went ahead and did go up, deserves a little more caution. And you see, for an hourly chart, it really didn't go up that much. It went up from around the 10.04 and a quarter, 10.04 and a half area up to around 10.06 before the market had, I believe it was the news releases. Okay, so just use caution. You got to keep in mind, the background. I talk about reaction bars a lot. Looking to break the 50% level of those bars and that. And in this case, no, we went ahead and did not break that, and we pulled back, and this pullback bar almost erased this bar completely. That gives me room for pause. Okay. All right, very good. Let's go ahead and go to the next one. Hey, Scott, be happy to talk about those more, even tomorrow or this afternoon. Okay. Just trying to, we're way, got a lot going on here, trying to get this through here. We're almost done. Okay, yay or nay on this hourly chart? Okay, Tom says yay. Anybody else have any thoughts here? Hold on. There we go. All right. Hasn't come up yet. Let's take a look here. Let me look on my other computer. Yeah, it's up there. Just took a minute for it to switch over. Okay. And the answer is not for me. And one of the biggest reasons is, I'd like to go ahead and point out, we were in the middle of a support level there. We did have a crooked finger down, but we were in the middle of support, and more importantly, gang, we're in the middle of support. Look at the close of this bar. Okay, it was around the 10.02 area, right? Where's my 20-period moving average? Heck, where's my slow speed line? Over 10 points away to my slow speed line. And even more points, 11 or 12 points, a long way to go to safety. You got that right, Scott. Okay, so keep that in mind, gang. Don't forget how far, if you're trading off a 60-minute or a 30-minute chart, don't forget how far this thing can move against you if you're using speed lines or 20-period moving averages as stop ideas. Okay? All right. Next chart. What do you think of this one? Here's the hourly line in question. Yay or nay? Yes. Okay, well, the answer is that this doesn't look too bad, okay? We were in a resistance level which we had tested several times back here, 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 and here. And now we're finally getting a setup out of this as well, okay? So basically this is one of those where it was in the middle of the night and you look at this and you say, okay, I like the setup, not too bad. I like it's, you know, it's curling up here. Where was the last time that it did that up here? You didn't see that when it tested the previous levels before. Here's the closest it came, and it didn't even get that close really. So here it comes all the way up, tests the resistance level, pulls back, holds above the 20-period moving average, and rallies on. Okay, so but nonetheless, it's still in the resistance band area. It's the middle of the night, so significant caution is warranted. You have to be mindful of where your resistance is and probably trade really light is how I would play this if I were actually doing this trade in the middle of the night. Trade really light. Okay. So, but good. I appreciate the viewpoints there. And the good news is you'll be able to talk through these, obviously, during the trading day as well. So, you know, lots of good learning to come on these live in real time. But this sets the stage, and that's why I put 50 different examples together, you know, less than perfect examples, because you're not going to learn from perfection. Now, look at how when I showed you guys almost the perfect setup there, all of you guys jumped on there like crazy a few minutes ago on that second to last 30-minute chart, because once the perfect ones happen, they become so incredibly easy to see. Well, get trained on these harder ones so that when the better ones come, you can make better decisions quicker. So what do you think of this chart here, yay or nay? Hoping to see some quick answers here. Okay, Rick, yep, I know you got to go ahead and get back to the students. So thanks for sticking out as long as you can. We're only a few away, Rick, from being done here. So you got to be here for the majority of it. So we'll catch up later. All right, and exactly. No, no, no. Very good. Why no? Well, why no for a couple reasons. Number one, there's no trend. Okay. Number two, the RSI is not even below zero yet, is it? In fact, it made a hockey stick. Now, do you guys remember the other day when I showed you the hockey stick on the daily chart and I said what that could mean? What did I say that could mean? The hockey stick could mean a pop-up, and sure enough, we got it. Well, here we had the hockey stick, so we had to be cautious about a potential pop-up. On top of a sideways market, there was no support to our trade if this thing started to go ahead and, you know, move up really. Okay. RSI, like I said, at the flat line, no, way too much risk here. So very good. All right. Almost done. Got a couple more here. This one and another one. All right, gang. Well, what do you guys think? Yay or nay? Hoping to see a lot of the same answer on this one. Okay. Well, Byron dares to be different, but in this case, this was a good setup. Okay. So it ended up bouncing off the 50, had a hook. The pullback bar was on light volume. We were clearing resistance here. We had multiple points to the next resistance level. We had a strong daily uptrend. Remember the strong daily uptrend back here? Remember, there's the daily chart, gang. So let me clear this all off. We had the, at the time, look over here, we had strong daily uptrends. Look at my speed lines on those dailies. Look at that RSI. Everything was strong over here. So we got a pullback and a resumption in the direction of the trend. Like I said, we got the pullback here. That's right, Gary, exactly. It's like a crooked finger pullback here on light volume right there to the speed line above the resistance with air and room to grow for a couple points there in between. So, yeah. Okay. Appreciate all the answers. It allows us to discuss it a little bit further. All right. And like I said, this is why I intentionally pulled together, and that's why it took so long. I pulled together different types of examples to really start sensitizing to you guys to this process. Okay. This is the final 60-minute chart. This was back here in the middle of a strong uptrend on the dailies. What do you guys think, though? Yay or nay? Note here, I'm going to expand this if you don't mind. I've already shown you the daily part of it. Let me go ahead and expand the chart up a little bit here. Got a doji star there where it started to settle a little bit. Okay. And the short answer is here, there is a resistance band specifically in here at the 1009.50 to 1011.50 area, okay? And so we were in that at the time, okay? That is, something to note. And the other thing to go ahead and note, though, is that the what I would like to do on a trade like this is wait for a little more confirmation, okay? And it basically would have taken the next bar to go ahead and close like it did, because this bar then would have got me near the above that 1011.50 and shown me a resumption of the trend, okay? And it was on better volume, okay? This bar right here. So, and in fact, this is very similar to the trade that I did last Friday. That's almost identical to what I looked for, if you recall, on last Friday when I was taking that other trade. Despite the resistance above, I was looking for some evidence of continuation. And this bar right here, post consolidation, post doji, gives me that little extra oomph there, which actually, like I said, cleared the 1011.50 area as well. Okay, but nonetheless, people need to also keep in mind the background on this, and that's what I'm trying to get people not to lose sight of, because people do that sometimes. Look at the background. We had the strong uptrend. Look at the speed lines going up here. Okay, we had huge uptrending taking place. Even prior to this part, we'd already had uptrending taking place back in here. You can go back and look at it. That's why I'm painting the bar here, so you can go back and see it. And let's look at this big picture. The market comes up to the 50% level on the hourly, fails to break it. Finally, it breaks it. That leads to the rallying. Okay, so from here up, pulls back, hits my 50, deflects off it, and resumes the uptrend. I look at that stuff, which is why I have that on these charts in the first place. So, but nonetheless, you guys did a great job of going ahead and look at this. That's why I put all these different examples together and look at this. We've been talking for several hours now. I don't know, 4 hours and 40 minutes here. So, I really try to put a lot of effort into this for you guys to show you these, different setups, okay? And so, there we have it. Basically, we reviewed this. We talked now for 4.5+ hours on this. You guys you've already watched me do a couple of these trades the last few days. This is going to be the focus as we go forward now, into the back half of this year. There will be more things that I add to this, but right now, out of the box, these are the things I really want to focus on with you guys. Just as you saw me do the last couple of days. That's right, Tim and Barry and that, we've got a lot of great things to come here. We've got, thank you guys, I really appreciate that. We've got a lot of really great stuff and a lot of really great discussions to talk about here as we go ahead and move through the remainder of the year. But I wanted to put a lot of effort into this presentation because you guys are all here with me. Many of these will go ahead and be, many of you are going to be with me now the rest of the year, so we're going to really get to focus on these as we go forward. So I really want to do a nice job for you guys. Okay, got me in a little bit of trouble with my mother-in-law, as you know, Gary, or my mother-in-law to be, I guess, my potential future mother-in-law, spending so much time this weekend instead of with the family camping and stuff. But I think it was well worth it. Because this is important to us as we go forward, especially this back half of the year with what's happening with this market, and so got to be careful. I'm already calling her my mother-in-law. That get me a lot of trouble. But no, seriously though, we have a lot of great stuff. As we go into the end of this year. So I just want to let you guys know that I'm excited. I really appreciate it. Thank you very much. Your comments mean a great deal to me. So with that, I guess to wrap up, put a nice little bow on it there. Just go ahead and say thank you guys. Obviously, I'm going to go ahead and we're done with this portion, and now we can just go ahead and get back into the room and do our thing. So thank you from me to all of you. I really appreciate all those great comments you guys just left me. So we'll see you on the flip side in just a moment. Don't go anywhere. Okay? Thanks, gang.